Hey traders, welcome back to my channel. Today is Sunday, September 15th, 2024, and today I wanted to break down a trade setup that I was watching on Friday, the 13th of 2024, and walk you through the thought process on how I trade fair value gaps and how I use these fair value gaps to make better trading decisions and smarter trading decisions. As always, it's about waiting for the right setup, sticking to your rules, and focusing on risk management. That's key. So on Friday, I didn't really have a setup that I absolutely loved, but I was keeping an eye on the market because it's been really strong lately, and I had a couple key areas that I was watching closely. As we know, with the strength in the market, I was really looking for a move back into, this 557 area. Um, for a move higher uh, in this, 5,580 area on ES, and we didn't get that move lower for for to see a bounce. That's one of the trades I was looking to take. The other idea was, although it was a counter trend trade, was on QQQ, and I was looking for a move into this 476 area, which is a bearish fair value gap. Now there is a fair value gap on SPY, and I'll get into this into a minute why I really wasn't interested in this particular trade. It was more about this 476 area that I was interested in taking a short. Um, so let's get into this. So the first idea was the with the strength that I'm seeing in the market, I wanted to see a move back into this 557 for a move higher. And that's the same for ES. I wanted to see a move down into this 5,580 area for a move higher. We didn't get that. In hindsight, that would have been a great trade to take. But the other idea that I had was this 476 rejection. So I wanted to see a move into this bearish fair value gap for a move lower. Now, you can see that there is a bearish fair value gap on SPY at 562. But that wasn't a trade I was interested in taking. And the reason why is because as we moved closer to that level after the market opened, we had a key area right below it. And the the thing is with the way I trade, I don't want to short into a demand or any key area, whether it's previous day high or it's a bullish fair value gap. So if you have two key levels stacked on top of each other, for instance, a bearish fair value gap, and then directly below you have a bullish fair value gap, I consider that the no trade zone because price will likely bounce between the two of them. And not only that, if I'm shorting into a bullish fair value gap, price can bounce off of that bullish fair value gap and go in the wrong direction and put me on the wrong side of the trade. And that's why I just wait for price to break one of those fair value gaps because essentially one of those fair value gaps are gonna break, and then typically when it breaks a bullish or bearish fair value gap, it'll typically break it with strength because it needs that increasing volume to break through that, and then with that break, whether it's breaking a bullish or bearish fair value gap, that increase in volume will likely create a new fair value gap in that direction, and then you can look to take that continuation trade, right? As price will eventually retrace back to that new fair value gap for a move in that continued direction. So let's walk through this. Now, when the market started, um, I'm in replayed mode here on TradingView. As the market opened, I was watching this previous day high. Now, I wasn't planning on taking a trade off of the previous day high, but I was keeping an eye on it. If it breaks below and stays strong below previous day high on QQQ, then I would have looked to see a break on SPY. Again, I wasn't looking to really take a trade off of that, but that's just something I keep an eye on. Now, I'll stop right here. Now, you can see that there was a move into this um, fair value gap on SPY. Okay. Now, Why wouldn't I take that trade? Now on the 3-minute chart, you can see that this is the exact candle that I want to see when we move into a fair value gap. This is a high volume rejection candle. We can clearly see that there's a lot of volume. And this is a new indicator that I've used it in the past. And I'm starting to use it again. It's called VSA, volume spread analysis. It's something I talk about all the time where it shows the same amount of volume as your standard trading view volume indicator. What's different is that, when, your traditional volume indicator, if you have the moving average enabled, and I have a shaded area, it'll show you above, you could tell if volume is above average or below average. Uh, and I can see it here, right? So this blue area, I just switched to a different chart here just temporarily, but this shaded area is your moving average. And anything above it is considered above volume, above average volume, and anything below it is below average volume. So you can kind of determine based on the volume if it's above or below average. And that's cool. That's still a powerful indicator to use. And this shows the same amount of volume. The difference is that the bars, if it's a blue bar, that's essentially low or extremely low volume. Green is like low volume, average volume, and then your yellow is high, and then your red bar is extremely high. So the advantage of this indicator, if you have a difficult time, I know there's some traders that want to watch volume and are in their heads are telling themselves to look at volume, but sometimes you forget because you're more worried about the candles. At least with this VSA indicator, the advantage is that these very colorful bars stick out, right? And if you have your standard volume indicator on, this very big bar may not stick out, right? Even though it's a long bar, it may not stick out to you. Whereas when you see these red bars, it may be like more appealing to the eye and may catch your attention. And that's why it may be beneficial and provide an advantage to some using this indicator. So it's called VSA. You can just type in VSA and you'll see that indicator volume sort of analysis. And you can replace that with your standard volume indicator and see if that works for you. Again, it's all about being able to visualize and seeing these red bars that will stick out and catch your attention. Hey, this is something to pay attention to. And that's why I like to use it. So anyway, going back to this this candle, it was a high volume candle, and there's three things that really stick out. Number one is the candle formation. Okay, you could see that there's a long top wick, and this is exactly the type of rejection candle that I'm looking for, like the pin bar candle off of a key level. That's number one. Number two is the high volume. Okay, we can see clearly that this is much higher volume than any of these previous, candles. Now, with the move up, we can see that this is the biggest bar, is this candle here. And then we can look at the volume. It's a low volume move up. And then we can see that once we get into the level, there's much higher volume than this biggest bar, almost double the amount, right? This is, 26, and then this is about 65. So we're talking like 2.5 times. So that's a high volume rejection candle, exactly what I want to see. So that's number two. And then the third thing is using the volume delta and knowing where the most traded volume was. We can see that black horizontal line here at the top of the wick. That's where the most traded volume was. And that's another key thing, is that if all of your trading volume is, when it moves into a key level, if it's in the key level and price is being pushed away from that, that's a sign that sellers are in control. So there's three things right there that are telling you this is an area where there's a lot of focus and there's a lot of, sellers, because this is a bearish fair value gap. Now, given the fact that this is everything that we want to see when we move into a bearish fair value gap, the problem with taking this trade is when there's key levels on one of our tickers, on SPY, for instance, that essentially provides a level of resistance across the entire market. So when we move into a bearish fair value gap on SPY, as we did, that creates a level of resistance across the market on, on QQQ and on ES and on NQ. And you can clearly see that the move is exactly the same. The candles are very similar. We may not see the same type of volume. The most amount of volume is on SPY because that's actually where the fair value, the bearish fair value gap is. So most sellers are here, but the market, all of these others are all following. Okay, you can see that the volume is higher than the previous ones on here, but the one candle that really has the clear signal is on SPY. Now let's get into why this wouldn't be a good setup for me to take. The reason why is because again, there's a key level below that I won't short into, and that's previous day high on QQQ. Now I'm looking to trade QQQ because that's all I trade is QQQ. But the move that I would take a QQQ trade off of SPY because SPY is moving into a bearish fair value gap, which would bring the market down. And I would take that move if this previous day high wasn't there. So it's a no trade for me because I will not short into previous day high. So that's a no trade. Now, if this previous day high isn't there and there's no other key level like a bullish fair value gap, previous day high, previous day low, then that would be an A+ setup for me. I'm taking this all day long. But the fact that we don't, this area is here, I can't take that trade. So that's a no trade. Now it did work out, but again, risk to reward, I can't favor that. That's not a trade I'm interested in taking. So now we reject, we break previous day high, okay? And although that may work out, it's still not the trade. I just missed that trade. That's all there is to it. I'm not willing to take that. Now let's move forward. So we see a move to the downside. Okay, we see a new bearish fair value gap created on the 3-minute, and we see that across all, right? We see this on SPY, QQQ, ES, and NQ. All right. Now, where are we at this point? So at this point, we have a bearish fair value gap. We're below previous day high. Okay, now the question would be, well, in this particular case, would we look to take a trade off of this bearish fair value gap? Now, again, under normal circumstances, yes, because we got a bearish fair value gap. And this is only in the 3-minute. I typically don't take 3-minute, fair value gap trades, but it all depends on the type of price action I see off of it. I do like the setup because we do have a bearish fair value gap at previous day high. I like that. I like to see the confluence. I like to see two different key levels in the same area. We have a bearish fair value gap on QQQ, and we have previous day high. I like that setup. But then the problem still is that we have, if we were to take this short, it would be a very short-lived trade because we have previous day high sitting right here on QQQ. Now that is a dollar move, but I just, and plus we have this fair value gap here below on NQ. It's still a good, some space. We need space, but I wasn't really looking for that trade, to be honest with you. The trade at this point is these bigger major fair value gaps around. Yes, this SPY is a major fair value gap that I would be, interested in, but again, we have the problem with this previous day high on QQQ. So at this point, what I'm really looking for is the main trade setup that we talked about earlier is the move into 557, the 5580 on ES, or the 19,357 area, or this other major fair value gap on QQQ. That's the real setups that I'm looking for. So I have to remain patient. Okay. So let's move ahead and see what the market does. So we see a rejection candle. Price breaks right through that fair value gap. We bust right through it. Now we're right back to where we were. Okay, we're right back where we were again in the fair value gap on SPY. Okay, we moved above previous day high, and we're right back where we were again. Will I willing to take the short off of that? No, again, because previous day high is there. So then let's take a look and see what happens again. We reject again. Now this is, now we see that there is a bullish fair value gap created on QQQ, and there's a 3-minute and a 5-minute. So I recognize that there was a 5-minute fair value gap created on the 3-minute and 5-minute on QQQ. So what I'm going to do is I'm going to mark those out, and I saw those on Friday, so I had to mark those out. So here is going to be our 3-minute fair value gap. Now, why am I marking them out? I'm not necessarily marking them out because I'm looking to take a trade off of them, but what is important is that if I do look to take the short off of this 476, if it does work out, at least I know where I can take profit, because I know where price could react. So there's the 3-minute fair value gap, and then now here's the 5-minute. Now on Friday I didn't immediately realize that there was a 3-minute, but I went back and cycled through all the time frames, and I did see the 3-minute. I did notice the 5-minute right away because I was looking at the 5-minute. So here we are. Now this is what's key. And by the way, we also have this on NQ. So there's the 5-minute fair value gap on NQ. So here's what's key. I was on a call with a couple work friends, and we were looking at a trade plan, and they were looking for any trade ideas that I may have. It wasn't any surprise to me at that point in time that at this point we're in a no trade zone. Why? Because we are in a bearish fair value gap on SPY, but now we have a bullish fair value gap on QQQ and on NQ. So price started to chop around a bit. Why? Well, it's pretty easy, right? Now, those who I was talking to on the phone that morning were curious why price was choppy. They did not have the fair value gaps on their chart, but I'm actively watching them. So it wasn't a surprise to me that we were seeing this choppy action. SPY can't go any lower because there's this area that QQQ has that's holding the market up. So across the board, we can see that price is being held right here because NQ and QQQ both have a bullish fair value gap. So SPY can't go anywhere, ES can't go anywhere. And then on the flip side, price can't go any higher on any of the four, including NQ and QQQ, because there's a bearish fair value gap on SPY. So we have to see one of these break to the other side. Okay, we have to see a move over all of these fair value gaps, really, and then hopefully that strength will create a new bullish fair value gap, and then we can look for a move higher. The other idea would be for that we would need to see these bullish fair value gaps break and then create some space and allow for a high risk to reward, a better risk reward trade to take the short. We were in a position where I didn't see any, great setups, honestly, until we get down to this 557. I'm not trying to force any trades, but I'm just looking for opportunities, right? And these have to be high probability setups. So to continue on here, price is choppy. Okay, we can't get above this fair value gap. We can't get below it. All right. So what we would want to do, my idea at this point was that we either break to the upside, create a new bullish fair value gap, look to trade that for a move higher, or we need to take out this bullish fair value gap. Now, what do I mean by take it out? So as we know, SPY is in a bearish fair value gap. Okay, so sellers are going to be pushing price down. We have sell orders sitting here, and it's going to push price down, but we have buying pressure here because we have buy orders sitting in this area. So price is just ping-ponging between the two levels. We need one of these sides to be taken out. So the trade idea at that point would have been for me to say, hey, we want to see price move down and mitigate this bullish fair value gap, meaning we want to take it out. Now, when I say take it out, I mean, we want to see price move to the other side of this fair value gap to mitigate it. Now, when we mitigate it, what that essentially is doing is it's taking out all of the buyers, in that general area. Okay. It's taking out all the buyers in that, that was way too big. It's taking out all the buyers. I'll just use a rectangle. It's taking out all the buyers in this whole area. This whole area here where we're seeing price hold. We want to take that out. So that all this area that has the buying pressure, we want to take that out so it removes all those buyers, so that if we do see price go back up into this QQQ fair value gap, it's now creating some more space for us to be able to take a better trade to allow price to move down, so that price isn't going to just immediately bounce right in our face. We need to create some space here in a higher risk reward trade. Okay. We want to take out ideally both of these fair value gaps. And then when we take the short off of this bearish fair value gap, we can look to target previous day high. Okay, that's a $2.50 mover, somewhere along those lines, and that's a good trade setup. I like that. So in order for that to happen, we have to see the selling pressure push price down off of SPY, which will bring price down on QQQ, and take this bullish fair value gap out. And in order to take it out, we have to see price fully cross this bullish fair value gap to the other side, to about right where here, 470, 431. Take that bullish fair value gap out, and then see price move back up. Hopefully we can go into the 476 area, and then look for price action to take the short. Now let's see what happens. We'll start to move this along. Now we're seeing price start to move higher into this bearish fair value gap. We see like type of candle that we want to see. Now we're at the median, and I know that with fair value gaps, price will usually react off right up the edge or at this median. Okay, and we did see reaction, but again, we're not taking that short because we're now shorting into a bullish fair value gap, and that's again a no trade zones for us. So if we're now that we're at the median here, and there's some strength here, and there's some selling pressure, this should initiate some downside, which may, mitigate this bullish fair value gap. There's our downside move. We haven't quite mitigated it yet. There's our mitigation. Now, as you can see, that bullish fair value gap has been removed from the chart, and the reason is because it doesn't apply any longer, because it's not a fair value gap anymore. It's been mitigated. So now I'm going to remove this. So at that point in time, I removed that from my chart. Now, this 3-minute fair value gap does still exist, right? Because we'd have to essentially go down into previous day high on QQQ in order for that fair value gap to be mitigated as well. So now we've accomplished something, and accomplished something in the sense that if price does go into this 476 area, at least we've generated some space and provided some better risk to reward on a potential short, because we don't have a bullish fair value gap sitting right there in our face that could cause price to reverse if we did short and go against us. Now my trade idea is, okay, let's see if price can go into this 476 area to take the short. Well, the only thing that's going to prevent that from happening is if price goes back into this bearish fair value gap on SPY and rejects again. Will I take the short? Well, maybe not. We'll see, because we still have to consider this fair value gap here on QQQ. So let's see what happens here. Now I'm going to switch to the 15-minute, because this is where we want to see. This is where I'm taking my confirmations. Okay, so we finally entered. We're in there now. Okay, so now we're in that fair value gap. Perfect. This is exactly what I want to see. Now on the 15-minute, I did see this candle right here, but I'm not solely convinced at all. The one thing I do like is that when we look at specific setups, The important thing to note is we are at the median on SPY, and we just entered this fair value gap on QQQ. So the fact that the median, without getting too technical, the median can create some selling pressure because we're in the median of a bearish fair value gap. I like to see reactions off of that area because it's a key area of a fair value gap. And I also like to see that now that we're in the bearish fair value gap of this QQQ. Now, if we're all interested in knowing what this, this fair value gap is on QQQ, this is a pretty big 1 hour fair value gap on QQQ. Okay, we could see the reactions that have taken place off of this fair value gap previously. Now we know that every time it's touched, it can become weaker and weaker. So we're just looking for price action, some high volume rejection candle off of that. Now I look at all different time frames. Okay, so I was looking at the 1 minute, I was looking at the 2 minute. So every time price goes into this level, I'm looking for, clues. As we move into it, are we seeing, anything that's going to give me some sort of clue that there is a lot of selling volume in that area? Okay, now one thing I noticed here was on the 1 minute, I did see this volume spike, this red, very, very high volume, and that was on a bullish candle. So I noticed that, I evaluated it, and I said, okay, that's just a push up. I want to see like these high volume, spikes as we move into this bearish fair value gap on QQQ. So I'm cycling through, and I see this candle here didn't produce any really high volume, and I'm just actively watching this. So now that was something that was very interesting, was that look at this volume spike, okay, on this particular candle here. All right, that is a lot. That's the most amount of volume on a 1 minute that we've seen all day. Now, if you see that amount of volume, all this is on the 1 minute chart. I'm not taking a trade off of that candle, but that is telling me something. Hang on. Now, if we were seeing a very big, candle push up, then that would tell me, okay, that all that pressure, all of this volume is likely buying, and maybe this trade doesn't work out. I want to continue to see now. Is this are we going to start to see price move up? But it's just the candle itself that we're wicking off of this level. That is telling me that, okay, that's giving me information. All we're doing is collecting information, right? And as price is moving up into this, there's a couple things I'm looking for. I'm looking for those, high volume candles, but I'm also looking to see, the other key thing is when we move into key levels like bullish fair value gaps, bearish fair value gaps, are we seeing an increase in volume or are we seeing a decrease in volume? When we see an increase in volume into this level, that's not a good sign if you're looking to take the short, because you want to see a decrease in volume. You want to see, the lack of buyer interest as price moves up. Because if there's a lot of sell orders sitting here in this bearish fair value gap, you want to see a decrease in volume, because you want to see that decrease in demand as you go into that level, so that when we do hit those sell orders, it's going to exceed the buying, and you're going to see that impulsive move. On the flip side, if you see increasing volume, buyers are still interested moving into that level. And if the buying pressure exceeds selling pressure, then those are when you see those bearish fair value gaps where price breaks through them. Now, I had mentioned on social media, last week that I saw unusual activity because there were a lot of very, very key, very strong bearish fair value gaps that we broke right through across the market, even on NVIDIA. There was a very big bearish fair value gap that was created on the 4-hour chart in NVIDIA. And we did, and those, some may know what I'm referring to, but there was one that was created on NVIDIA, and that was created on that during the earnings move. NVIDIA suffered their biggest single day loss, and that created a 4-hour bearish fair value gap. Price did move into that level and react off of it. I did take a short off of that, but then we moved back into that level and we just blew right through that. I was extremely surprised, to be totally honest, because with the amount of volume that bearish fair value gap had, I didn't see, or at least I didn't expect to see that price move through it as it did. I was looking to take a very, very heavy position on that. Of course, based on what I saw, and I did take a medium-sized position, and I able to, I price moved back into a key level, and I took profits, and then I ended up selling some others for break even. But I didn't see the reaction that I was expecting to, because when price did retrace back into it, it just nothing gave me any sort of indication to take that again. It was an increase in volume, and it blew right through it. So that particular example was that we saw an increase in volume, and that's not what you want to see. And that was one of the key things to look for. Part of the criteria is to look for the decrease in volume into that. We didn't get it. Same thing applies here when you see, this break and retests, if you will, because that's essentially what, your fair value gaps are, is it creates it, right? And then it retests it eventually. Anytime a fair value gap is created, price will eventually, go back into it, and that's essentially a break and retest. We want to see a low volume pullback or a low volume retracement into that level, and then you want to see an increase in volume off of the level. Okay, so I'm watching the volume, and I'm not seeing an increase in volume per se. I'm looking at all different time frames. I didn't see a major increase in volume until we got into the level. Now, once you get into the level and you see an increase in volume, that's where you have to analyze the candlestick, because you have to make an assessment. Is that volume buying pressure based on the candle formation, or is it, a rejection candle, and all that volume is created by selling pressure? And what we're expecting to see is the selling pressure. Now, when we look back at the 1 minute chart, we saw that high volume spike. Okay, very, very key. All right, we're looking at the 2 minute, same thing. Look at the candle. Okay, that candle right there is very key. So now I got my checkbox. Okay, now you can say, yes, there's kind of an increase in volume there, right? But overall, for looking at all of the charts, I'm not seeing a major increase on this move up. All right, and I think on the 5 minute it was where, or even the 15 minute, this is where the start of the move. This is the start of the move. You see this big candle here. Okay, this is the volume bar for this particular candle, a big price movement. And then we see lower volume, because this is a lower, smaller candle. So I wouldn't expect to see the volume based on the volume. I wouldn't expect to see this same large candle. And then we see this candle create that much volume. So we're just assessing volume in the candlesticks. And then now this is the candle where I actually got in on the trade, is because it's not completed yet. I'll have to play this, but this was the candle that gave me my entry, because here's why. When you assess the volume on this bar with this volume here, okay, let me flip this to the other side. Okay, that, and then we look at the volume on this candle and we compare it to this, right? This is where you have to do your assessment. This volume created this candle movement, or this price movement. Okay, big candle, a lot of volume. And then when we look at this candle, this created even more volume. All right, so if there were buying pressure, the way you interpret this is if there were more, if this is buying pressure, look at the volume. Just look at the volume itself, right? This candle it had this much volume. So when we apply it to this candle, if there's even more volume than this candle here, and there were buying pressure, there was buyers are in control here, we should see a candle even bigger than this to the upside. But we don't see a candle bigger than that or even close to the size. In fact, we see a long top wick and little price movement from the open to the close. That means that all of this volume, majority of this volume, is all what price was pushed up, buyers push price up, and sellers push price down on a 15 minute. And this is my confirmation. This is the where I, this is the time frame that I like to take my, get my confirmation. The other key thing is, we see the candle that we want to see. we see the volume we want to see, and then this third piece is the volume delta, where we see all of the highest trading volume or the highest trading activity was above price, right? This is where we all see it. Now, we don't have to necessarily see, when we look for these types of signals where we see the highest trading volume, it doesn't necessarily have to be in the area, the key area. But the fact that it's on a rejection, we're seeing price, the highest activity above current price. So 476.27 is where the highest activity was, but current price is down here at 476.15. It's above price. So that would tell me that that checks off the third box, that all the trading activity was above current price. And that was my entry. Now, I take my entry. Where's my next key level across the market, right? Where's my next level across the market? It doesn't have to be on QQQ. It has to be anywhere on the market, because any of these four can create a move back up. So my next level is, well, either 19,513 or this 474.51, which is a 3-minute bullish fair value gap. Okay, I'm going to remove these now. Okay, that's my next key level in the market. So on the 15-minute, we see the candle we want to see. There's our rejection candle, and boom, we see our move down. Okay, we saw this big candle to the move down, and then on the 2-minute chart, we just see this move down, and excuse me, and then we're now in this fair value gap on NQ. Okay, now I have no reason to sell at that point in time, because that's my next key level in the market. But I'm not looking to take. I took a couple contracts off there, but I want to see us move down into this gap here. Now this is a 2-minute bullish fair value gap, but I didn't take any. I didn't sell off this because we moved right through it, right? And now I'm looking at the candles to see if there's any candles that are going to show me that there's buying pressure here to give me any reason to take anything off, and there wasn't. I was really targeting this 474. So as we continue to move this along, I hit my target right there. I had sold another 80% of my position. I held on runners, because now that we're kind of holding this NQ median, then when I saw a strong candle, that's when I had taken my position, and it was on a higher time frame. I believe it was on the 3-minute, where I saw, or the 5-minute, one of these higher time frames, where I saw that there were increase in volume. I think it was on this candle here is where I said, okay, I'm gonna just take my final position, or my final sale. And we're at 115 in the day, right? So that was the other thing too, is that I want to secure my profits and get out. I don't like to trade later on that far in the day anyway. We're beyond 1 o'clock, so I'm not interested in that. So this can bounce, go back in the opposite direction. I don't have a lot of time for, because if we see a move up right now, although I've taken position, taken profits, given that the fact that we're so late in the day, I just sold my entire position, got out. If it were 10 o'clock in the morning or 9 o'clock in the morning, then, if this were to create a bearish fair value gap on this move down, I can look for a move back into it for a move lower again. And we did on the 5-minute create this bearish fair value gap. But as I said, at that point in time, I'm not really interested in trading any longer, right? Because it's too late in the day. Now, again, if we're earlier in the day, then I would look for price action to see, do we react off of this new bearish fair value gap? Under normal circumstances, if it's earlier and there's more time, then I'm looking, to see what type of reactions do we see off this level, and do we see any reactions that would give me any reason to hold on to some of my runners for a move lower. And we move down to the 2-minute time frame. We look to see, okay, that's the type of good retreat reaction. That's the type of candle that we want to see, that type of candle there. But again, we're getting too late in the day now. We did see a move lower, and that was just a little move. But I was already kind of out of my position at that point in time, and wasn't interested any longer. But that was essentially the trade. And I wanted to take just a few minutes to talk through kind of the mindset and how you can analyze specific fair value gap setups. Some fair value gaps are sitting in the middle of nowhere where there aren't any other key levels around. And those can be straightforward, meaning that, if we see the price action, we can target, the next key level, and those can be a little bit easier, right? Trading fair value gaps isn't necessarily simple. It can be complex and be a little complicated. And this is one of those complicated situations where when you see a bullish and bearish fair value gap, that does give you this no trade. It's a no trade zone. But I wanted to walk you through the mindset that you can have and the type of trade setup you can have where if price is in a bullish and a bearish, it's going to create selling pressure on both sides. And eventually one of those sides are going to break. So once one side breaks, it can then create an opportunity, and then you can capitalize on that opportunity. And that's exactly what happened on Friday. Now, again, Friday didn't have any great setup for me in the first place. I don't really like to trade on Fridays anyway, but I had to see this A+ setup. And again, one of those fair value gaps have to get taken out to create that space and create that improved risk to reward trade that I want to take, because I don't want to take the short into a bullish fair value gap. That's a no-no. So those that are learning to trade the fair value gaps, don't ever short into demand and don't ever long into supply. Allow one of those sides to break, and you have to be patient because it'll eventually will, right? It's all about being patient. Being patient in a market, you'll reap the benefits if you can stay patient. And you probably hear traders tell you all the time to remain patient. And when you do, you're going to be successful. You just have to wait and not, force trades. And if you can do that and practice risk management, you're going to be fine in the market. So, as I say all the time, sticking to your rules and staying disciplined is key. And if you continue to apply those rules every single day, you're going to be okay. So I hope this breakdown helped you understand how I trade the fair value gap. I'm going to continue to push out more content, show different trade setups, provide some more analysis when I have time. I'll look to provide some more trade setups and analysis this week, but I hope this video here helps you understand, if you were looking at fair value gaps on Friday, what you could have looked for, so that if you see this type of trade setup again in the future, you can apply this mindset to help you, help present a trade opportunity that you may not have saw in the past. Again, thanks for watching, and I'll catch you in the next video.